Welcome back to the Cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is continuing to play out the larger bearish divergence on the weekly time frame, just like what we saw last time, but the price is now starting to break below a very important area of support on the daily time frame, as the price of Bitcoin is now exactly wiping out this major level of liquidity in the Bitcoin liquidation heat map, which we need to pay attention to. So I'll be talking about that in just a moment, alongside Ethereum, which is now also following Bitcoin, potentially starting to break below a very important level on the price chart, while the price of XRP is now further extending the previous bullish divergence on the price chart. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the weekly Bitcoin price chart, and the super trend indicator, like I already said in recent videos here on the channel, has now officially confirmed a reversal signal for the first time since the previous Bitcoin bear market, obviously flipping from green now to red in the super trend indicator on the weekly Bitcoin price chart. So obviously this is a big deal to pay attention to. This is a massive bearish signal, which is now confirmed on the larger time frames. But just keep in mind, it does not always guarantee a 1 year bear market. Sometimes that can just mean a period of bearish price action, maybe for a few months. So either way, it is of course a bearish signal, but does not necessarily guarantee a 1 year bear market is all I'm saying. But at least over the next 1 or 2 months, I do expect a lot of weakness. And obviously I've already been saying that every day over the last 1 month, thanks to this Bitcoin price chart, still on the weekly time frame. Obviously we're still playing out this massive bearish divergence on the weekly Bitcoin price chart. We already confirmed the higher highs in the price and the lower highs in the RSI over a month ago, as I've been saying every day since back then, telling us that we're most likely going to see a lot of weakness, lacking bullish momentum. So most likely a bit of a pullback or a larger correction playing out for a period of weeks or months as a very likely scenario. But obviously, once again, that's been perfectly playing out as expected over the last 1 to 1.5 months now, and this will likely continue at least over the coming weeks. Most likely over the next 1 or 2 months, we're likely going to see a lot of weakness, lacking bullish momentum. Remember, on smaller time frames, from time to time, we can see little bounces here and there in the price of Bitcoin. It's not going to be a straight line down, but on the larger time frames, don't really expect a massive high momentum movement towards all-time highs really anytime soon. Talking about the next few weeks or months, at least for now, that is very unlikely. And if we're taking a look at this daily Bitcoin price chart right now, as of recording this video, the price of Bitcoin is breaking below this very important area of support, the golden pocket area of support, which was sitting in between roughly 92.5k to 94,000. And over the last few days, we did obviously find a decent amount of support at this area of support right here, obviously holding the price just above that area for a few days, for almost half a week. But now that we're breaking below this area, obviously we're simply just continuing the larger bearish trend. And this is what I've talked about over the last few days. Of course, as soon as we ran into this area of support, I said it's likely that maybe just for a couple of days we could hold this as support, but overall the bigger picture still bearish. So soon enough we could likely continue the bearish trend later on, and once we see this break towards the downside, of course the next major level of support to watch out for is at roughly 85 to 86,000. But as of recording this video, we have seen one daily candle close slightly below 92.5k, but not yet really confirming a candle close below 92,000. So for now, obviously we are breaking to the downside, but ideally we need to see a little bit more confirmation in order to actually open a trade, for example. And so what would actually be perfect, as always not financial advice, but let's just say if the price came back to retest close to 92,000 and then failed to get back above that area, found resistance in this area in between roughly 92 to 94,000. In that situation, of course, on that possible retest, I'm not saying that will happen, I'm saying if that happens, that would make for a potential excellent entry point for a short position. Once again, not financial advice, just simply sharing an example of a trading strategy, because for example, if you're shorting a move from somewhere around here and then taking profits closer towards the next support, that is a possible trading strategy which would have worked out very nicely at these previous breaks towards the downside below these previous points of support. And so for now, expect resistance in between roughly 92 to 94,000, and once again a lot of support at around 85 to 86,000. And if we're taking a look at the shorter term on the 6-hour time frame, obviously that bullish divergence did not last very long at all. So this is just a sign telling us that we don't really have any strength in the market. We have a lot of weakness, lacking bullish momentum, because usually a bullish divergence like this, kind of like what we saw last time, plays out maybe for a couple of days if we're talking about the 6-hour time frame, in the form of maybe just a bit of a sideways consolidation or very slight little relief like this, and then maybe continue the trend later on. But obviously we were very quick to continue the bearish trend this time around. We didn't really play this out for very long, so ultimately, once again, that's just another sign on the price chart telling us that we have a lot of bearish momentum, a lot of weakness, and clearly lacking strength. And so, as I've been saying every day for a long time now on the channel, don't be fooled by these short-term bullish moves, because that's all they are, just short-term bullish moves that could potentially trap you in, for example, a long position. Let's just say if we see a slight little bullish move like this and you open a long position right here, obviously you'd be trapped in that position, trapped in a loss, and basically forced to take a loss out of that trade if we continue the bearish trend like what we've just done. And so that's why it's so important to understand the trends that we are in, which for the last couple of months, 1 to 2 months, has clearly been a bearish trend. And for now, that is still the situation. For now, we have no signs of a reversal out of this bearish trend, at least for the next few weeks or months. This will likely continue to be the case. And if we're taking a quick look at the Bitcoin liquidation heat map, taking a look at this major level of liquidity here, looking at the last 1 month worth of price action, we could see a lot of liquidity sitting at roughly 89,000. And obviously that's a level that I've talked about many times over the last 1 to 2 weeks or so here on the channel, and that was sitting right around here, and the price of Bitcoin is just about hitting 89,000. On some exchanges we got very close to 89,000 with this latest drop. By the time you're watching this video, it might even be slightly lower. But of course, over the last 1 or 2 weeks or so, this has been kind of acting as a magnet for the price of Bitcoin, pulling Bitcoin towards this liquidity, considering usually the price of Bitcoin moves towards where we have a lot of liquidity, especially if we're looking at the slightly larger time frames here. So obviously that was another factor on top of all of these other factors pointing towards a continued pullback coming soon. But now that that liquidity has already wiped out, we don't really have a lot of liquidity immediately to either side of the price of Bitcoin, to the downside or to the upside in the shorter term. The next major level of liquidity to watch out for is at roughly 83,500. But obviously before we could hit that level, we do have this next major Fibonacci level of support at roughly 85 to 86,000. So those are really the next major price targets towards the downside, now that we're breaking below 92 to 93,000, or 92 to 94,000 I should say, which was this previous area of support, which I'd now be expecting resistance in. But remember, this is not all doom and gloom. Just because we're in a bearish trend, it does not mean everyone should be losing money. In fact, you can be making money during this trend that we're in right now, using things like short positions, for example, to profit along the way towards the downside, as I mentioned earlier with that example of a trading strategy to profit from that next bearish move. Or obviously, if you're simply just a spot trader, you don't really use short positions or anything like that, you could simply just be patient and wait for some slightly lower prices to get better deals in the crypto market, to accumulate some crypto assets at cheaper prices, maybe in the coming weeks or months as this bearish trend continues a little further here. And so it's during these times in the market where things are flipping more bearish, where a lot of people like to just leave crypto and quit paying attention to crypto. And it's during those times in the market where there's massive opportunities. Obviously, for example, near the second half of 2022, most of the retail investors were completely out of crypto. They had already given up, quit crypto, think that the whole thing's just a scam by that point right there. But that was the point where there's the biggest opportunity to actually stick around and keep paying attention to crypto. If you'll take advantage of those lower prices here, obviously you're making massive returns in the following recovery and the next bull market. And so this is the time to definitely get set up ready to go on a crypto exchange to take this next trading opportunity, as it is just now potentially starting. And personally, I like to use Pinex as an exchange, so I'll make sure to leave a link to Pinex below the video. And that first link below the video will take you to this page right here, where you can take advantage of some major bonuses that are only available using that link. For example, if you deposit as little as $100, you get a $200 bonus from Pinex onto your Pinex account. If you deposit $1,000, you get a $600 bonus. This goes all the way up to these much larger amounts, where you can get up to a 40,000 USDT bonus onto your Pinex account. So obviously massive bonuses here, and then you can go ahead to actually use that bonus from Pinex in order to actually open these grid bots right here, these futures trades over for Bitcoin. And so basically you can make an account, get set up ready to go, make a deposit using that link, and then use the exchange's money to actually have your trades over on Pinex. At least your first one trade, for example, you can actually go ahead and use this bonus to actually make a trade on Bitcoin if you want to, not financial advice, but if you're going to be trading crypto anyway or preparing to take the next trading opportunity, you might as well take advantage of this. Once again, first link below the video. But if you want a no KYC exchange, another option out there with very cheap trading fees, there's also 2bit as another exchange that I also use. So I'll also make sure to leave a link to 2bit below the video. And if you use that link, it'll take you to this page right here where you can also take advantage of massive bonuses. For example, up to 10,000 USDT in trial funds and 8,000 USDT in actual withdrawable stablecoins just by depositing and trading crypto using the link below the video to Pinex. So once again, if you're going to be trading crypto anyway, definitely check it out, take advantage of this. And on top of that, without making any deposits or any trades, you can get a free $30 sign up bonus and 1 month free VIP 3 upgrades. So basically very cheap trading fees and essentially free money from the exchange, which you can use to go ahead and actually make a trade over on 2bit using the exchange's money just by simply making an account. It takes 30 seconds to do this, to take advantage of these bonuses using that second link below the video to 2bit. And once again, in case you're wondering, 2bit is a no KYC exchange. But with that being said, taking a quick look at the Bitcoin dominance, and right now the Bitcoin dominance is continuing this pullback as expected. Obviously, as I've been saying every day for around a week now, expect a bit of a pullback moving forward in the Bitcoin dominance as a very likely scenario. So ultimately, this is just continuing to play out, and this is what I continue to predict right now. Expect a little bit more of a pullback moving forward in the short term for the Bitcoin dominance as a very likely scenario. We have obviously changed that previous price structure from that short-term bullish relief to now a bit of a correction in the Bitcoin dominance, which is actually a bit of good news for the altcoin market. Now, obviously, if Bitcoin is dumping like this, a lot of altcoins will also likely still be dumping against the US dollar. But if the Bitcoin dominance is dumping like this, it means altcoins might be holding up a little bit better than Bitcoin. So for example, if Bitcoin is down, let's just say a few percent, altcoins might not be down as much compared to what Bitcoin is doing in that example. And of course, this is talking about altcoins on average. Of course, there will always be outliers, but a lot of altcoins on average will likely be holding up a little bit better than what Bitcoin is doing, but still likely bearish against the US dollar, just not as bad as Bitcoin is basically what this means. And if we're taking a look at Ethereum on the daily time frame, right now the price of ETH is potentially about to follow Bitcoin. Obviously, Bitcoin is breaking below a key Fibonacci area of support, and Ethereum is potentially just now starting to break, not yet confirmed, but now starting to break below a very important Fibonacci level of support, which was sitting at around 30.50. So really in between around 3,000 to 3.1k, we've had this major area of support right here where we've seen multiple important bounces from. But right now, as of recording the video, once again, we're getting very close to breaking to the downside here. So especially if we see a daily candle close confirmed below 3,000, and especially if we fail to get back above that area, in that situation, the next major point of support, the next retracement level towards the downside is at just above 2.6k. So really in between 2.6k to 2.7k is the next significant area of support to watch out for, the next major price target towards the downside if we first actually confirm the break below roughly 3,000. And once again, no matter what happens in the shorter term, clearly the larger price structure, the larger trend that we are in right now for the price of Ethereum is still clearly bearish. We're still forming lower highs and lower lows, and right now we have no signs of reversing that trend. And if we're taking a look at this daily Ethereum price chart, obviously the price of ETH is still forming lower lows while the RSI is possibly still forming a very, very slight higher low. But at this stage, we're getting extremely close to actually breaking below the previous low, which means there'll be no bullish divergence even forming, let alone actually confirming. But obviously, as I've already mentioned over the last couple of days when I talked about this short-term bullish divergence, I said right now we don't really have a lot of confirmation actually confirming the bullish divergence. So like I said, once again, we still need to see a little bit more of a bounce actually confirm like this in the RSI on the daily Ethereum price chart in order to properly confirm the bullish divergence, and then finally expect a bit of a shorter term relief. So maybe a sideways consolidation, for example, kind of like what we saw last time, just a bit of a short term break during this bearish trend. But remember, in order to see that, we need to actually confirm the bullish divergence. Right now, not confirmed, still possibly forming, which means it's possible it could confirm later on, but right now obviously things are still currently looking more bearish than bullish, especially if we're talking about the trend, the price structure, the momentum, all still pointing in the bearish direction. So basically just pay attention to these points of support along the way towards the downside, where we could possibly see bounces from along the way down. And if we're taking a look at the price of Solana on the 2-day time frame, it's a kind of similar situation for Solana, obviously still in larger bearish price structure, trending in the bearish direction. We've just recently, over the last half a week or so, broken below this important area of support here, which was sitting in between around 143 to 147. And we've seen actually a couple of retests back into that area, testing that area, but now confirming it as new resistance. As I've said, basically the moment since before we even actually retested the area, the moment we broke below the area, now expect resistance in between around 143 to 147, and obviously that's exactly where the price has been finding resistance at as expected. And as for support, pay attention to roughly 135 as a level of support, and below that expect a decent amount of support in between roughly 124 to 127 as another area of support to watch out for. And once again, overall still currently bearish, so in the immediate short term it's possible we could remain in this little range between support and resistance, but overall we're still in a bearish trend. We have no signs of reversing this trend, at least as of right now, which means it's possible that maybe in a few days, maybe in a week, that sort of time frame, we could possibly continue the trend lower later on, especially if Bitcoin does the same. Once again, Bitcoin really helps to lead the market, so if Bitcoin's still looking like this, a lot of altcoins will look very similar to whatever Bitcoin is doing. And if we're taking a quick look at the price of XRP on the weekly time frame, we're still playing out the massive bearish divergence on this massive time frame here, which has been playing out over multiple months now and is still playing out. This is still influencing the price of XRP, so continue to expect a lot of weakness, lacking bullish momentum, and most likely a continued significant pullback playing out over a period of multiple months. And once again, I've been saying that every day since almost the all-time high around end of July, early August is when I started to warn about this massive multi-month pullback coming soon. Obviously, it has been playing out exactly as predicted since then, and this is likely going to continue to play out moving forward. This is still currently active, and if we're taking a look at this daily XRP price chart, right now the price is currently extending the previous bullish divergence, possibly about to reconfirm the bullish divergence, but right now that reconfirmation has not currently happened. We have not yet reconfirmed the bullish divergence. We're just possibly forming a new one, basically extending the previous one. So obviously right now we're forming another lower low in the price chart in the candle closes in the price of XRP, while the RSI, at least for now on the daily time frame, is still currently sitting in higher lows, forming higher lows. But once again, we need to now reconfirm this higher low in place. We need to basically confirm the new higher low in place in the daily XRP price chart in order to actually confirm this new bullish divergence and effectively extend the previous bullish divergence. And if that happens, if we see a bit of a bounce like this confirm over the next couple of days in the daily XRP RSI, then maybe we could see a bit of a sideways consolidation, maybe a slight bullish relief for a few days, maybe a week, maybe 2 weeks, that sort of time frame, just a shorter term move. Of course, the last bullish divergence that played out over roughly around 1 week, with first a bit of choppy sideways price action and then a slight bullish relief. But remember, a bullish divergence by itself does not necessarily mean a massive bullish trend reversal. It does not guarantee huge bullish momentum. It just means expect a bit of a break in the short term, or a bit of a relief from the trend, from all of the bearish price action, but not necessarily the end of the trend, which means even if this confirms, once again, right now it's not even confirmed, but even if this confirms, we could just play it out over a few days, maybe a week, but then it's possible we could continue the bearish trend lower later on. And as for support and a resistance to watch out for, pay attention to this area of support as a major area of support to watch out for, in between roughly $2.05 to $2.07 approximately. And as for resistance, pay attention to this area in between roughly $2.30 to $2.40. And if we're taking a look at the price of Chainlink on the daily time frame, right now it's a kind of similar situation for Chainlink, still clearly within a larger bearish trend, forming larger bearish price structure, but right now we're possibly extending, possibly could reconfirm this bullish divergence, but right now we have not yet confirmed the new bullish divergence. So obviously we have already confirmed the lower low in the price in the candle closes, but we've not yet fully confirmed the new higher low in place in the daily Chainlink RSI. So we need to see a little bit more of a bounce like this in the RSI actually confirm over the next 1 or 2 days in order to reconfirm the bullish divergence. And even if that happens, once again, we could maybe see just a slight little relief in the short term, maybe for a week, that sort of time frame, playing out some choppy sideways price action, maybe a slight little bullish relief, but don't expect significant strength in the market. Don't expect a massive reversal reversal out of the bearish trend based on this alone, because obviously we did see a bullish divergence back here, and that played out for close to a week in the form of a slight bullish relief, and then ultimately we continued the bearish trend lower later on. And so once again, right now, as of recording the video, we've not yet even confirmed the new bullish divergence, but even if it does confirm, expect something like that just in the shorter term. But overall, the larger trend still bearish. We currently have no signs of reversing or ending this larger bearish trend. And as for support and resistance to watch out for, expect a lot of resistance in between around 1520 to 1570, and some resistance potentially around $14.50 to $14.60. And as for support, expect a decent amount of support in between around $13.20 to $13.40 approximately. And if we break below that area of support, especially if we break below around $13, in that situation, expect to move down towards close to $11 as a very likely scenario. But remember, if you want to trade any of these moves in the price of any crypto, no matter what the price is doing, check out the links below the video to those exchanges if you want to take advantage of those massive bonuses that are only available using those links. And if you want to actually know how you can trade crypto no matter what the price is doing, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.